I think that we can start the second session. Probably the intervention of Binis Maghi at the end of the first session already introduced the second session, because the fact that in the first session we have been focusing our attention on the role of infrastructure in fueling European economic growth, in relaunching European growth, did not answer to the question, the other question, which is raised in the second session, on what are the conditions, mainly the regulatory conditions, at which corporations on one side and institutional investors are ready to invest and finance in infrastructure. The example of the suggestion of Binis Maghi, particularly for Italy, but probably in general, that the quality or the identification of what is an infrastructure done for, what is its contribution to growth, what is the value that an infrastructure produces in time, what is what are the economic grounds on which to take the decision of realizing an infrastructure, even before investing in it, financing it. Sometimes we have the impression that the two worlds, the real world and the financial worlds, are somehow separate. First, the decision of constructing an infrastructure, projecting infrastructure is done. Then we will look for the best way or the feasible way to finance it. I think that the integration, the interfacing of the two worlds should be more strict. The interface should be planned much time ahead. To be able to find a common ground on which, on one side, corporations and on the other side, financiers can meet and reciprocally satisfy their need, the expectation of being financed, the convincing nature, the convincing characteristic of an infrastructure to be financed by any kind of investor. I think that there are three issues on which these two partners of the investment of infrastructure development in Europe should meet, should reinforce their integration, cooperation. The first is the scenario analysis in which projects are conceived, and the knowledge of the territorial and context economy to evaluate the potential capacity of the project to generate value. This is usually lacking. Infrastructure are often decided on a ground or on a basis which does not necessarily deepen the demand, the value created in the territory, the feasibility of the project itself. So to understand what will be the demand of the service provided by the infrastructure in a particular area, in a particular context, is something which creates confidence, strengthens the confidence for the investor that that project is worth looking at for financing. These scenarios are lacking. I'm more familiar with transport infrastructure, but I would say that the same problem, and we will see in the intervention of by Mr. Patuano, that in different infrastructures such as ICT infrastructure, even the obsolescence the technological change and the ecological rhythm of change is such that if we do not understand what will occur in that field, investment is more risky, and there will be more cautiousness in deciding to finance a project of this kind. The second area of approaching of the real economy and the financial economy, or the financing world, is the decision-making process. Not only projects, the time of project, the authorization, the bureaucracy of the preparation of a project is an issue, but also the understanding of the public acceptance and public engagement in allowing an infrastructure to be realized. How many times we have noticed that an unexpected stop or a delay in the realization of infrastructure is due to the fact that the understanding of how people, citizens, and potential users also look at the infrastructure is something which the lack of understanding of this does not allow us, neither our corporations nor the financing institution to forecast what will be the time in which infrastructure will be realized and the time in which the payback will occur. So in this sense, we have also to deepen or rethink some of the techniques for evaluating the project. Cost-benefit multi-criteria analysis or techniques cannot be any longer a bureaucratic activity. They have to deal with the understanding of the conveniences, of the distribution of costs and benefits, of criteria for deciding and realizing and financing an infrastructure. And the third area where, let's say, a reciprocal understanding of the expectations of the corporation, of the institutional investors has to develop is the subdivision, the clear subdivision of risks. And the fact that we should not expect any actor of the process to take on his shoulder risks that he cannot control. The risks have to be shared, subdivided and shared according to the capacity of each actor to control the risk for which he is committed. If not, I think that there is a sort of discharging the responsibility of each actor, of some of the actors, on the shoulders of somebody else, which means that the process does not run efficiently and risk a longer time of of realization. Public-private partnership, as it was pointed out earlier, are based, rooted on a very loyal behavior in assuming the risk that one can take, and in declaring what are the risks that may not be taken without second thinking or backward thinking that do not bring to the result. I think that this issue of risks, how to what are the risks that an operator meets or faces, and what are the more important, is the question that I want to ask to Mr. Castellucci, CEO of Atlantia and Autostrade per l'Italia. We know that the risks are different. We want to know what are the risks that are more serious for a corporation such as ASPI, Autostrade per l'Italia, and where he wants to be more guaranteed. Please.